Has opened on a positive note. The Sensex is back above 26,000 and the Nifty is back above 7,900. Dipen, Sheth, Head Institutional Research at HDFC Securities, joins us now. He's our market master for the day. Dipen, hi, good morning. It's been a couple of good days for the market, but that's because we've seen a lot of buying come in from the domestic institutions. Do you think that positive sentiment will continue even if we don't get any major positive from the Parliament session?
So, Sonia, it's not just a two-day phenomenon. So let's get things in a little better perspective here. So if you go back all the way to 6-7 years ago till F9 or something, FY09, this is probably the first year that FIIs have actually pulled out a significant amount of money on a net basis from our markets. The last number known to me is a little more than 17,000 crores. And the market is down some 7% in the trailing year, or maybe YTD or something. And the domestic guys have put in 3.5 times plus this amount, 60 plus or something.
Yeah, 60,000 crores.
Right. Again, an unprecedented number. And you're worried about what, or you're excited with what has happened in the last 2 days. So let's get a fix on this phenomenon, okay? It's very clear, Indian investors are voting with their feet. They understand that there is a ground level change happening in this country. It's not necessarily reflected in IIP and business confidence indices and woolly-headed stuff like that right now. It will reflect over a period of time. We are taking all the right medicine. Again, if I get back to medical parlance, it's only a matter of time before the patient begins to do much better. No medicine tastes good when you have it or when you take it. But people are figuring out this is a fundamental, structural, basic change which is happening in the country. I'm completely hopeful that we are going to become we're going to become unrecognizably different in a decade from now.
No, I take your point entirely. I mean,
but then we are creatures of the market, and the world is slowing down, and the Fed is going to hike rates in December is the consensus view. So the markets will go nowhere for a while, and I'm okay with that. It gives me a lot of time to study and figure out what's worth buying.
Okay. Well, actually, let me come straight away to that and continue the conversation we had just before you came in, Dipen. Public sector banks, actually, there is a bunch of good news coming for them. They were surprisingly the supporters of the market in the previous contract. They were as an index, they rose about 2% when the Nifty itself was down about minus 2.8 or thereabouts. So are you beginning to nibble at that sector?
Absolutely. So public sector banks have had nothing going for them for quite some time, and I don't need to tell you about their stressed asset position, about their tottering capital adequacy, and about the fact that they're generally perceived to be inferior cousins of the private sector pack, and all with good reason. Now, when the tide changes, you need to figure out how and why the tide is changing. And the tide is changing simply, again, because of the way the government is working. And it will change over a period of time. There's a lot more work to be done. So I'm not going to go out on a limb and say each and every public sector bank is worth buying today. But I think I will soon expect to see the bankruptcy code out there, a proper bankruptcy bill or a law in force. I will soon, before that, I will expect to see that some of the errant borrowers are going to be chased by the law in a way that helps them cough up the money and helps liquidate their assets. And some of that is playing out, Even the private sector banks are forcing some of the large corporates to engage in asset sales and so on. I think a couple of large public sector banks have seen change in leadership. I must say, accompanied by bad news internally. So you look at what's happening in Bank of Baroda. You have a shining star from the private sector environment taking it over, and at the same time, a little bit of a scam breaks out in the Delhi geography. And so I think we're in the process of churn and evolution. In 2, 3, 5 years from now, maybe we will have a lot more regard and respect for the public sector banks. At that point of time, would you want to be in that space? Or so again, it's a question of, so let's bring back this ice hockey thing. Do you want to be where the puck is today, or do you want to be where the puck is going to be?
Okay, yes, we will answer that question. But you tell us about, some of the other mid-cap stocks that you've identified. And one of the big gainers is Majesco. In the last 1 month, Majesco has given returns of almost 80% to investors and traders alike. And you've been bullish on that story. From here on, how does the risk-reward look?
So here's the sorry thing about Majesco. Let me start with an apology. We were seeing it for quite some time and didn't quite have the conviction to go out and recommend it or write on it. And by the time we wrote about it, it was already, in my view, we had missed out a fairly sweet part of the uptick. We published on them just a few days ago. even from there the stock has moved. Now I'm not getting excited with short-term movements, or even in fact on having missed out much of the short-term movement. You look at what's happened in the stock in the last 2 or 3 months, and it's kind of given you multi-bagger returns already. There's a reason behind this, okay? And you won't see it in the numbers. Again, this is about where the puck is going to be, Sonia. Okay, so here is a software product company with a very unique positioning and a very respected positioning in the insurance product space. On property and casualty insurance in the United States. The addressable market, hold your breath, is $9 billion. The revenue run rate right now for this company is $100 million. Its products, it's the various modules of its insurance product find mention by industry leading firms and analysts like Gartner, who put it in some or other top quadrant of sorts. And you're just a $100 million company, a product company, so which means you've got non-linearity in your business model. You've made 2 acquisitions in the United States recently, one of which gives you business analytics strength, the other one gives you consulting strength. So that kind of completes the suite of services that you can offer. You're building out a very strong cloud practice. They're doing all the right things, none of which is reflected in the numbers right now. But I think in 2 or 3 years' time from now, 5 years' time from now, if they're 3 or 4x bigger, I wouldn't be surprised. And that's what I guess the smart investors are getting onto now.
Okay. The other news that the market is waiting for next week is whether the GST bill amendment bill will finally get passed. Now, where the debate has crystallized now is the Congress demanding that the 18% upper limit be written into the bill. Now, I don't know, but the compromise may be that the BJP relents to it unwillingly. If that were to be the compromise struck, would you buy anything because of that news?
I think there's a whole lot of stocks that are affected. I mean, it's a broad-based thing for the economy. It's
generally
not just
seen as positive if this compromise is struck.
Yeah. So 3 years ago or 4 years ago, when I was working in a different firm, this kind of the policy paralysis that the government was engaging in, and it led to a whole lot of political snafus. Now, I think we are back to politics versus economics, and that's the phrase that we used at that point of time. And if the leadership, if the political leadership of this country, and I mean ruling party as well as opposition, put their heads together and figure out, okay, I have I have my differences with you, but I'm going to put these differences aside and do what is right for the country. If I think the blokes out there get this part right, then I think there's a lot that can be done.
That is asking for a lot, Dipen. I'm only saying that at the moment, Shireen Bhan has done a lot of interviews with the entire spectrum
and
of
everybody's making constructive
politicians.
noises.
No, the noise they make is that we want that 18% in. And Mr. Jaitley correctly says that nobody ever puts a tax rate into a constitutional amendment. This is looking like a very stubborn position, actually. But assuming for the sake of argument that 18% is written into the law.
I don't know. I'm not a lawyer. I don't know whether you can put in a tax rate or not. It's there for the legal experts to comment. But I think a little bit of political graciousness might be called for at this point of time. If you could sail along, so that statesmanship, go back to Vajpayee's time. And
I think that's a tall assumption. Don't expect political statesmanship. I'm just asking.
You will be surprised.
Okay.
Okay, well, let's get back to some stocks then. One of the stocks that you've recommended or that you've been bullish on is Bharat Forge. And that stock has actually been a big disappointment this year. It's lost 40% of its value from the highs. From the highs of 1,300 or so. What makes you bullish at these levels, and what do you think the upside could be?
So Bharat Forge was a large FII-owned stock. FIIs have been selling. So the selling pressure has not been fully absorbed. This is one way of looking at it. To the news, the macro news coming out of the US and Europe, which are key markets for Bharat Forge, has been mostly, let's say, destructive, if not constructive so far.
Yeah.
And so to imagine a rosy future for Bharat Forge becomes a bigger and bigger ask with every successive piece of bad news that comes out of these geographies. I think some of that is changing now. Much of the macro and I would say industrial demand and truck demand, at least in the United States, is probably going to revive. Although truck orders are soft, sales numbers don't look too bad.
No, but the data is looking quite weak. I mean, it's been 8 months of lower truck orders from North America.
Absolutely.
That's not a small amount, right? And that will factor into the revenues at some point.
It will, it will. And so you might see another quarter or two of softer news or soft news from Bharat Forge. I think, again, what is important here is that as macros pick up in the United States, which I suppose they will, again, the United States is also, in case you haven't figured out, a direct beneficiary of lower oil prices. The United States is, even as we speak, seriously considering hiking rates. In response to higher wage inflation and very good job data. So that tells you that the good news, the achhe din in the US are also kind of at least visible or half visible to them. So I think it's, you know, the construct for Bharat Forge has been that it's a very highly capable company. Now, in the face of bad news, it'll go through 2 or 3 soft quarters. But there is no questioning the capability, the addressable opportunity. It's a relatively low market size in a very large addressable market. So if it won't do in F17 what it was supposed to do, I don't think there is a risk to F18 numbers. Or if it's going to do a little bit of a miss in F16, I'm not too worried about that. So it's a little bit like India, you know.
No, so would you
They've
extend
got
that argument
they've
to the
got
other
the game right.
to the other auto anchors as well? For instance, Motherson Sumi.
So Motherson is directly exposed. We don't have coverage on it yet, but it's directly exposed and much more to Europe and to a niche market. And it has an, you know, the range of products that it has directly gets affected by, let's say, what's happening at Volkswagen right now, and so on. So I think there the linkages are much more direct and less broad-based. Okay.
All right. Yeah.
Finally, the cement stocks.
So I've been saying this for I don't know how long now on your channel, that it's the mid-cap space where we find much more interesting stuff happening. So the multi-baggers have played out in the large cap. So Shri, there is complete regard and respect for what they've done, and they'll continue to do.
Shri
and it's been a multi-bagger for
Shri Cement.
Yes, absolutely. So, but you know, the current valuations are $180 or so, or maybe $200, that kind of range for a Shri or an Ultratech. They don't inspire you to go out and put the money. Having said that, I think if in the next 2 or 3 years government spend on capex, on infra construction takes off the way it will, then all the rosy numbers that we are cautiously building in for these companies will also turn out to be true. So that's my take on the large cap. You want a lot of things to go right, and much of that is built into the price or baked into the price. Okay, on the mid caps, you are still looking at a Birla Corp for well under $100. You're looking at an Orient for just around $100 or thereabouts. You're looking at a non-performer so far like a Mangalam at only $30 or so. Now, I think there are certain things clearly wrong in Mangalam in terms of being able to deliver even bare minimum profitability. So let's keep that out of the discussion. But an Orient, a Sanghi, a Birla Corp, these are deliciously cheap even today, despite their strong run-ups over the last couple of years.
Okay, Dipen, we'll have to leave it at that. Thank you for all of the stocks that you've discussed with us, and you have a good weekend.